Welcome to a capital hungry breakdown of AUD JPY. So what we really want to be looking at with AUD JPY is to take advantage of some more AUD weakness, especially with the sentiment given by RBA last week, right? So the Reserve Bank of Australia on a fundamental and macroeconomic level pretty much stated that their previous rate cuts were not doing the job and giving the economy growth that they really wanted, and that they are signaling for future rate cuts to come to further stimulate the economy and boost the microeconomy, right? So this further rate cuts would help boost Australian markets, would boost business-to-business corporate lending, all of that, right? And then we would see that. The same time that also caused some downside last week was right at the end of the week on Friday, Trump met with the Prime Minister of Australia and basically had discussions that China should be purchasing a lot more of US agriculture, right? With that being said, when you're speaking to the when you're speaking to the Australian Prime Minister and you're telling him that China should be buying more agriculture, this is going to heavily devalue the value of the Australian dollar because of their close ties to trade with China, and because of how the RBA has already spoken about trade war tensions causing a big impact on import and export of Australia, right? So basically what we saw happen last week is we had these relief points at the support created around $70, and we had the relief rally, which we capitalized on and was discussed over the last 2 weeks, right? The reason for this rally was trade war tension relief, as well as build up in pricing for the AUD RBA statement, where they were a lot more dovish than expected, right? So we had that break of structure where we broke above 72.5 and we came range to this 74.3 area. At the same time, RBA gave their sentiment of more dovish and wanting more rate cuts, as well as the end of the week comments by Trump, right? What I really want to know is some historical pattern analysis of what has happened when we have broken and retested these support and resistances on higher time frame before and had a very similar market structure, right? So you can see here, around end of the year, December 2018, AUD had a huge weakness. We had that whole flash crash wick, right? That obviously didn't even get filled till now, right? 2 years later. But the whole point is, when you're actually looking at price action, we had this bearish momentum and bearish trending market. We hit a support. We had some relief points for about 3 to 4 weeks. We hit a resistance to the left, if you're looking here. We had a complete turnaround and retested the initial support, and then upside in a ranging market for weeks on indecision, right? Because of that, if I want to short this pair, I want safer sell entries below 72.6 and below this resistance turn support here, right? Because of that pattern analysis there, we had the exact same thing happening. We have bearish momentum based on the rate cuts, based on AUD weakness, extremely weak economy overall. We have a support reached. We have 3 to 4 weeks of relief as it peaks to a resistance, and then a full flip right back to the support again, which is exactly what we saw here from December all the way to February, right? So what we want to ensure is that markets are not going to continuously range up and down in here. If they do on the 4-hour time frame, we can start taking advantage of intraday ping pong plays between this range of 72.6 to 74.3. Just be cautious of this support and this resistance strength level, similar to what we saw here happen for weeks, right? Look at these wicks in this ranging market in here for weeks, right? So you can saw the exact same thing happened. Price peaked, it created this range, and then you have price up and down in this range historically for about good 2 months. We don't know the exact current events or the geopolitical factors that were going on in there. We know trade war was still developing and starting. We know AUD weakness was still a factor back then, and then we saw those impulsive moves take over, right? So and also to note that it came to peak and then had further downside. So I don't want to see this range come peak to this trend line for one more time, then have downside. If it does, we're going to capitalize on this later on, maybe in a month or two from now, or in a few weeks from now, if we get that. But really what I want to ensure is to take an effective swing position on here. We either need a break above 74.3 where we had those resistance, or we need a break below, right? There's a lot more factors for a break below 72.6, especially on this pair, right? So what we're trying to take advantage of is the current seller's pressure, the trending bearish market now, right? The RBA sentiment given for further rate cut signal, as well as trade war tensions escalating, a sort of poor meeting between Trump and the Australian Prime Minister. And we want further trade tension escalations to start breaking below this structure and coming to the downside, right? Of course, we can get the pullbacks of the new daily and weekly. So we want to watch the range we're in as we start zooming in on the time frame. But that's just a macro view of what's going on right now with the Australian dollar, what happened last week, some historical pattern analysis of a range of potentially ranging markets we could get stuck in between the support and resistance, what happened here. If that does happen, this can be a very good intraday ping pong area if it's played correctly. Because remember, this is weekly. Even if you're looking at it daily, you're going to see the same type of ranging market when you come to the left here, right? So this is what happened. When you're dissecting this market structure now, it's a lot easier to see. But it's the exact same thing that happened here. You had the fall to a key area and support level, a support created, right? A rally that looked like they would continue to a further breakout, but it halted and created a range out of resistance that was already there to the left, right? Same thing here, right? A failure to break up higher and a full range all the way down to the support that was created, and you have this range created. This is the range that was historically created, and it was a bit messy. Then you saw a breakout and then a final, right? We could see that exact same thing happen here. If we don't see 72.6 break back below, and we see a ranging market on the first couple of days of the week, right? And we see, for example, we see trade war escalation sort of deflate the whole agriculture thing. We sort of see a solution to the whole agriculture thing that caused AUD to drop. And then we see some more positive comments from the RBA perhaps coming in the next couple of weeks, or some positive data from AUD just on services PMI and some smaller reports throughout the week. Then of course we can see that, because we would have some, if we have trade tension relief, we would see yen weaken and we would see AUD strengthen, and we would see it respect the support and start to range up in this area again. Otherwise, we want a break below 72.6 on the daily, a retest of that, and then further downside to at least 71 and further downside there as well, right? So please understand, with the current market conditions, the historical analysis, we are in a situation where if we don't break below 72.6 and have further confirms of downside, that we will range up and down until we get that fuel point, potentially come test this area for further downside, right? The only way AUD will have long-term upside is once further rates are cut and they take effect into the economy, or an actual trade deal, permanent trade deal is made between China and Australia, right? Until then, understand the market structure, the historical analysis, understand what's on the table right now, that we do have reasons for AUD weakness. We do have RBA signaling at more rate cuts, and we do have potential trade war issues related to Trump wanting China to buy more U.S. agriculture, and China reps leaving their agriculture meeting early in the U.S., right? This closed the week off, right? So as we go down to the smaller time frames, we want safe bets. So we either want trade war de-escalation and trade war relief, plus respect to support at 72.6, and then we can see potential range buys as we saw here. Or we want a break and retest of this level on the daily. We can wait for the week. We can wait a day or two. We can even wait for the RBNZ statement, because the New Zealand statement might further bring downside to Australia as well if they are also signaling at more rate cuts. It's just that cluster of similar data and sellers pressure, right, at that point. So further trade tension escalations, trade truce break, further negative performance from Australia, and anything relating to trade war or Iran tensions will inflate the price of yen and devalue the price of AUD, and we will see that break and retest on the daily time frame of 72.6 and further downside. Any mixed signals, or the trade war truce is not broken yet, or China says they're actually going to buy more U.S. agriculture, that kind of stuff will strengthen the yen, and it will cause a respect to 72.6, and we'll see that ranging market for potentially days to weeks, depending on how markets start to develop and price in what's really going on, right? Because you can see that AJ as a pair, once it has some impulsive movement, it can range, right? It can range, but we can take advantage of those ranges. I don't mean for all the negative artistry, but I hope you guys understand the historical analysis, the higher time frame view, the macroeconomic view, and what we can see potentially happen, right? So what we really want to watch is the area of interest at 72.6, and then we're going to watch how it reacts. We're going to look at the lower time frames, and we're also going to look at current events as they develop throughout the week that can either signal trade war relief or trade war escalation, and also anything related to Iran, because there's this double-edged sword here for AUD, that if the trade war de-escalates and there's trade war relief, but the war on Iran escalates, the war on Iran, any kind of global tensions are gonna escalate the price of gold, right? And due to Australia's heavy export of gold due to natural mining deposits, whenever gold value increases very impulsively and aggressively due to these geopolitical tensions, it helps it boosts the price of AUD as well, right? The only difference here is it's been halted because of the tensions that have been boosting gold have been trade war related tensions, and AUD is also closely related to China, as we talk about, right? So it has this bottle cap on it. Something else like Iran war tensions can take that bottle cap off and give AUD that further support from gold, right? If gold continues to push to, like, let's just say 1600s based on a real war in Iran going on, and the trade war just stays sort of neutral during that, the heavy inflation of gold price will also heavily inflate AUD's exports of gold and increase their GDP in that nature too, right? Which would on a investor level reflect right on the technical chart, and you see AUD get boosted. That's how that all works, right? But what we want to watch is the current events coming up this week. We want to watch New Zealand and how they set their tone. We want to make sure we don't, if we do have ranging markets and those mixed signals with the current events, we will see a range, and we can take advantage of that kind of ping pong play on the 4 hour you're going to see, right? Or if we have continued trade war tensions and that AUD weakness confirmed and yen continuing to inflate as a safe haven and a technical break of 72.6, we're going to see that downside that we can take advantage of, right? So it's either going to be one of these or just a straight break to the downside with continued trade war escalations if everything from Friday continues over, right? Because we don't want to actually, I don't want to put any trend lines or anything like that yet, just because I want to play between zones here, and I want to see if we either break below this, because this is purely zone plays now, right? We know our impulsive sellers have been in control. We know we peaked at that resistance. We know what caused this downside. We know all that. We want to ensure that we don't bounce off this support and continue to range. If we do, we're going to start taking advantage of those kind of ranging markets that can start playing within here that we saw AUD heavily does, right? After impulsive moves, AUD heavily ranges. Sometimes it breaks heavily out, but these are 4-hour candles and something you can take advantage of, right? Regardless of market conditions. If we understand the market conditions, we can take advantage of that, right? So what we really want is potential top wick created. Maybe we can retest this trend line. Maybe we can retest this. Let me clean this up. So this is the zone that was broken on a minor level. We can see the wick to the left here too, if you even want to connect it all the way back there. We know a new week is opening up, right? We know there's a lot going on in the week, and we know that a lot closed off the week. We could see a nice pullback as we are testing this 4-hour support, daily support in that range we're speaking about. We could see a pullback to test this area that was broken based on impulse, and then downside, right? So either we want to test this area or we want a break of this area in the downside that way to be safer, because this would be breaking back into that daily range, right? Anything that starts to break back up here, I don't want to deal with until I get respect to this resistance, right? If we break back above this and completely make this move irrelevant and come back and retest this zone, I don't really want to deal with this noise, because then I just want to see if we come back and respect the resistance, and then we're going to see further downside and ranging to take advantage of later in the week, right? I don't want to guess the tops of this range or the bottom of it instantly. I want to see if we can hold the market structure we left up on last week. This would be higher risk sell entry areas with the current event confirmed stated, right? Everything stated about trade war tension escalation, New Zealand signaling further rate cuts, JPY strength based on safe haven inflation. If we get those confirmed, more trade war, more tweets from Trump saying this trade deal is not working out how I wanted to, more issues with the Iran war and everything, right? Then we're gonna see this price hold, and this would be a higher risk sell entry area, and then you could start shorting down. And if we get a break of 72.6 and a break of this support here, that's gonna turn into a resistance, and we have a clean range to play for the week. If you get a break of 71, you're gonna see further downside, right? So we know what we're looking for. We know what happened. We know how we got here, and we know what we want price to do and what to patiently wait for, right? So we're gonna see how the week starts, how the markets gap, how everything from Friday continues over, and then we'll go from there.